Good morning. It's Tuesday, November 11th. Happy Veterans Day. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So today's top story, the reopening rally, it fades a bit as precious metals continue to hold gains. Gold continues to surge as U.S. lawmakers move closer to ending the government shutdown. It's just going to help lift the fog around the Federal Reserve's path on interest rates. Ending the shutdown would give investors greater clarity on the key official data such as jobs and also inflation, and shift the market back to the fiscal deteriorating outlook here of the U.S. economy. Now looking at the gold market here yesterday, we saw the largest one-day dollar and percentage gain here since Monday, October 20th, and it's been up for two consecutive sessions. So we've rallied about $131 or about 3.1% over the last two trading sessions. That key level to watch, that 52-week high, is right at that 43.36. That was on Monday, October 20th. Now gold volatility, that also surged here with yesterday's big rally here, jumping up about 14% at 23.36. So it remains elevated above that 20 mark. As you see this volatility pick up, remember volatility, it works both ways. So if you're long the gold market, great, you tacked on $131 in two trading sessions. However, that volatility being up there, you could expect the average true range to fluctuate back and forth at that greater mark. Now, the 14-day average true range on gold is about $94, so expect to see that heightened volatility continue. And with the overnight session compressing only about a $30 range here, we'll see how this trade plays out throughout the rest of the session. Now, looking at the silver market at $50.95, that's up 65 cents or up 1.3%. So a big move higher here. And if you've been working with me closely, we were anticipating that the days over 50 were not done here. And if we broke over that 49.72, that most likely 50 would be breached here yesterday. And we saw that with the largest one-day dollar and percentage gain here since Monday, October 13th. It was the fifth highest close in history, and we've been up for two consecutive sessions, tacking on about 5% or $2.38 here. That 52-week high, that key number to watch is about $53.02. So looking at the average range on that, about $1.69 on that silver market. You got stochastics rising, you got DMI at plus over minus, and you got the MACD looking to turn positive. Now, how I use the MACD is I look at if it's a positive histogram, then many of these breakout trading systems, specifically intraday ones, will only take the long trades. If it's negative, it'll only take the short trades. For instance, what it would look at, and this is an example, just purely for example purposes, is if you look at the previous day's high, if the market breaches that high, it enters into a long position. It'll have a predefined target and stop. So it'll go for, say, something like $1,500, $1,000, $2,000, and it will only risk about $500, trailing that stop behind it. So that's how the MACD comes into play with different systems. And if you know me personally, I've studied thousands of trading systems and created these things on Excel and other different networks. So looking at the equity markets here for the moment, stock futures have slipped after Monday's gains here. However, traders, they do have multiple reasons to feel optimistic and much more optimistic than last week because of the fact you have the corporate buybacks. They are providing a tailwind for equities now that the earnings season is over. You have U.S. companies that are authorized to buy over $1 trillion of buybacks this year through October, and it's been an increase of 15% from last year. So November is typically one of the strongest months for buybacks, and it's usually the tailwind that takes us through the rest of the year. Now, one reason why we are fading a little bit overnight, however, starting to recapture, the Dow just went positive, the Russell's only down 3, the S&P 500 down 13.5, but you do have the NASDAQ down about 0.4% here, down about 98 points. So NVIDIA's underperforming the Mag 7 in pre-market trading as SoftBank sold its entire stake in the chip giant. Now you look at the CME's Fed Watch tool because that's something that has not been moving, but I anticipate that it starts to move here and we get some more of a pinpoint as far as what's going to happen at this December 9th and 10th meeting. So markets now see a 63.6% probability the Fed will cut rates by 25 basis points. This is down from 68.6 a week earlier. You go to the poly market because we want to see That jumped up to 72% yesterday. Now it's back at a 68%. So no actual rise in these expectations based on available data. But once we start to see data come out, this situation is going to fluctuate quite a bit. Now you look at the dollar index, just slightly lower, 99.42. It continues to ease a bit after reaching a 5-month high, jumping over that 100 mark, but is consolidating a touch. Now you do have some weakness with the UK, with the British pound here leading the charge lower, and its unemployment it rose more than expected to 5% in the last 3 months in September. That's the highest since 2021, prompting traders to add bets that the Bank of England will cut rates next month. You look at the 10-year Treasury yields, they're up 1 at 4.13%. You look at the November VIX futures, that has collapsed significantly back below that 20 mark here, sitting at 1858. That's up 6. And Bitcoin volatility continues to surge here at about $4,500 a day as that fluctuation back and forth. You look at the overnight trading, 107,925, so $107,925 was that high, $105,080 was that low here, and we're just about down 0.5%. You look at the global markets here, European stocks, they gained for a second day. Asian stocks, they fluctuate as investors weighed in on the progress from the U.S. ending that government shutdown, the lingering risk towards those stretched valuations, and you got some potential for some renewed trade friction. So the MSCI, the Asia Pacific Index, it gave up its early gains as much as 0.5%. We will get some economic data with the NFIB small business optimism. That's something I watch if I trade the Russell. So because of the fact that you want to see optimism continue to gain here as far as what's going to take place with small businesses, if they are optimistic in their growth, in the Fed cutting rates, we should see profitability of small businesses rise and become a tailwind here for the Russell 2000. We will have Fed Barr speak here. That's one of the central bankers. And then out of the 457 S&P 500 companies that have reported so far, 81% have beat analyst estimates, only 15% have missed. So we get to the ETF flows and the precious metals. This is something I'm watching. A little bit of concern on the silver market here. And because of the fact that we saw ETFs, they cut about 1.15 million ounces of silver in the holdings in the previous trading session. So what they're doing is they're lightening up as this market's come up, and they've been rotating into other asset classes here because money, it has nowhere to go. It either goes into cash, it goes into tech, goes into Bitcoin, goes into gold. It's got to go somewhere. It ain't going to sit there. So when it comes out of the gold market, it's going somewhere. So it's the 4th straight day of declines. You know, the key is you find out where it's going and you get involved with that particular party here. So the gold market, the ETFs, they were flat. They cut about 1,300 troy ounces. It's up about 17%. Year to date, as far as ETF flows here, gold is up about 57% year to date. And if you look at platinum, palladium futures, the ETF flows, huge upswing here, and then they've just been holding steady. Platinum, they're continuing to liquidate as the market goes up as well. Something interesting, the gold-silver ratio, not actionable, interesting, 81-1 on that gold-silver ratio. So we'll see what happens. Might be a lighter trading volume day because of the fact that it's Veterans Day. A lot of people hunker down here. It's pretty cold. Down here, it's like 39 degrees in Florida at the moment here. So this is unseasonably cold here for us. Natural gas prices, yeah, I talk about this before, is that when you get the polar vortex or you get this cold thing, what happens is the traders bid it up into that. And as the market spikes here and they get clarity of how much consumption is going to have, these are the big boys, how much consumption, and then also how long is this going to last, they come in and they sell against it and they hedge their natural gas production on these small spike ups here and there. Unless you get some extended where it's 2 or 3 cold snaps here in a row that is unprecedented, or it lasts longer, or a jet stream pushes it off, then you start to see really that explosive situation, and it catches them and it causes them to reverse and cut their shorts. So natural gas, I've been trading since like 2002 or 3, back when everything was rigs offshore and we really were monitoring the hurricanes and things like that. So you guys got any questions, give me a call, shoot an email, info@bluelinefutures.com. Sorry, I'm under the weather here. I think I might have like laryngitis or something. So remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.